Good evening, and welcome back for another video with Grey Man's Profits for beginners. So today, you're understanding the market, you're starting to get involved, but you haven't really analyzed which patterns work for you. Well, look no further. This will be part one of maybe a 5 or 7 part venture, where one, I break down the different patterns and whether they're bullish or bearish, and in the later videos, I'll indicate, okay, where is a good place to enter from these? I might mention a few techniques here and there, but the later videos will give you a step-by-step of, okay, if you see this, this is the entry, this is where to put your TP, and this is where to put the stop loss. But for now, let's get into it. So, the first thing that you'll see is I have selected 2 patterns, and they are inverses of each other. So, they follow the same pattern, but depending on which way they face, they have the opposite effect. Bullish and bearish. The first one I want to break down to you. This one is the bread and butter of ICT. This one is called the head and shoulders, just here. And the reason that they call that is because these slight mountain peaks look like 2 shoulders and a head. So it's very easy to identify. The reason that this is important is, 1, this move here in the first half represents a bullish movement. But once this reversal comes here, so what you would see in the market is, of course, it's following a pattern. It might come from lower down here and slightly stoop up. You see a lower high being formed, then a higher low, and then a higher high. And instead of following the bearish pattern, the bullish pattern, where it would continue upwards, this drop here, the short, has continued past the deviation line of this past shoulder and has continued down to reach into this new range, which was the higher low. This indicates a break of structure. So, when we watch the play go out, you could have either caught this movement as a loss, if you wanted to, a short. But if you were to wait it out, you watch another bullish move come up and align with the top peak of here, and then turn and continue down. The reason that I'm hesitant for you to put in the trade first is, of course, the market can change. So if you see something and you go, oh, that looks like something, and you jump at the opportunity, it might not turn out to like that. So if you watch the movement play out, you can go, okay, now that I know that that pattern has displayed, you use an educated guess and you use your head and you go, okay, I think that price is going to move in one way, and this is only a secondary confirmation. Do not make this your primary focus. Anyway, so we've watched price re-enter into this zone and then drop down further. The reason that this is important is, of course, if you see this second shoulder, you can place another short, and this would be a great position to enter. You buy here, set your stop loss above, and you watch it go down. But if you want to play it more safe, you wait for it to retest into the demand zone, which is down here, and then falter back down. Because sometimes, if it was to continue, it can indicate a reversal and spike back up. So if you wait for the confirmation to come back up, then you have a better chance. The second one, this one here. So this is a bullish move. And as you'll see, it is the exact same as the head and shoulders. So everything that I've just said for the previous video, for the previous pattern, applies to this one as well. So when price comes down in a bearish movement, so it would have most likely come from a higher high, come back down, and is balanced out. And most likely, what you'll see down here is here, you will most likely see at the very apex, as the biggest Q you could possibly have, is a hammer. as we've discussed in one of our other videos. This will indicate a buy icon, and the same as up here. This will be your main indication at the very top that a change is coming. So, it has followed the same pattern down, and it has gone further to make so higher high, higher low, higher high, lower low. And once it is retested up and has gone further than the breaking point, creating a break of structure, it is continued up into this demand zone. If it continues up, so be it. But it will most likely come back and re-intercept with this shoulder, continuing down and continuing up. As I said before, if you're an intermediate or you're a bold choice, you can start your trade here. Buy and set your TP as such. But saying that you are a beginner, let's say that you're a little bit nervous. I would wait for this confirmation retest and then set your trade. This way, you don't have to worry that anything in the market is going to change. Perfect. Okay, the second idea. This one is very, very simple. This one is the double top. So, what you'll see is most likely with quite a few fair value gaps included in this upward tick, you will see that price will skyrocket up. Huge buy icon. And what it will do is it will reach a peak before, of course, the firms or other traders go, okay, it's time for reversal. Where, okay, the volume here is intense and it's slowed down. So, people start to sell. This indicates that, okay, it's changing direction. But what you'll see is if you wait it out and you see, okay, once the sell is continued and people start buying again, if it does not breach this section here, which is at the same level as above, that you are most likely looking at a double top. This would indicate that, okay, you're about to be in for a massive drop. If you were bold, you could short from here, setting, as I've just shown up here, your price range to drop down. But saying that we are beginners, you can wait a little bit. So, if you watch this drop happen, come down, it will most likely intercept with price down here. And you wait for the retest to come back up into the demand zone. And what you'll see most of the time, and I'm talking about 85, maybe 75%, between that, so a large majority, it will come and retest into this demand zone, which would most likely align with a fair value gap formed in the middle of this large bullish movement. So, once you see that the fair value gap has been filled, it is an indication that the market is going to short. And this is where you would set a trade. This is where you can get confirmation going, instead of working with fear and taking luck into this, going, okay, I really hope that is going to continue down. You can catch a reliable movement. The same applies for the double bottom, which is exactly the opposite. It is a bullish movement in the end. So, you take the bearish movement which is coming down, and just like in here, there will most likely, because of this large movement moving very quickly, you will see that there are quite a few fair value gaps that form in the middle, or maybe up top, which show, what do they show? liquidity left on the table. So, these fair value gaps will likely be filled. So, what do people do? They introduce buying into this selling motion, which rises up and brings it back into this demand zone, which aligns with the fair value gap. Then people will continue the the bearish movement downwards. What this one indicates here is this here, just like over here, is a break of structure, where instead of continuing down in a bearish movement, going from higher highs to lower lows, lower highs to an even lower low, it has created an equilibrium across. And this will be an indication for change. So, as I said before, if you're an intermediate and you know what's coming, you can set a giant jump, maybe for a large long trade, to go all the way from here to all the way from here. But as beginners, let's follow it through. So what you'll see is there'll be a large buy icon and then a retest into this demand zone, which will align with the fair value gap. And that is your cue to go, okay, I can make a reliable move to the buy side. Set your TP, your stop loss, and take off. Well, I hope that familiarizes you a little bit with this pattern. We'll come back to more information like this and similar graphs that might look a little bit confusing, especially when compared to this. But these ones behind me are the bread and butter for ICT. Start familiarizing these patterns and you'll be profitable before you know it. The only difference between a beginner and an intermediate, realistically, is that they feel comfortable recognizing these. You're already halfway there. Okay, hope to catch you next time, and once again, be the gray man.